focusing?
Well, the S&P 500 may have reached key levels here. It was certainly a wild week for the broader markets. And maybe a comeback could be ahead. Grasso's headed over to the plaza to take us off the charts. Grasso.
All right, so this is like a huge game of trade or fade right here. So let's just take a look at the charts and see what they say here. So this is the 200-day moving average. The market has told us that the 200-day moving average is actually the most important thing for us to focus on. So back here, when we had that big sell-off here, was about 11% move. This move was only about a 7% move. But we only broke the 200-day moving average for 1 day and closed below it for 1 day. We did the same thing in March. Here, we've been battling with it for about 5 days. The more you battle with it, one or two things are going to happen. Either weakens it or strengthens it. I think it's weakening it. I think we're going much lower from here to start. But I think we rally into year-end because you're battling seasonality of biblical proportion. Hedge funds are behind the eight ball. They need to buy stocks. You need to buy them into the close of the year. So I think we will see this level again, the 2710 level, which was our recent low. If you want to lock in some profits, if we break the 200-day moving average, which is 2768, you can lock it in and try to play for a bounce off of this. If this level doesn't hold, kiss your kids. Don't go home.
Steve, I've got a question. I know we're talking about technicals here, but the argument that hedge funds who have underperformed have to chase into year-end, wouldn't this be their chance to actually outperform if the market's going lower and they short the market or they actually push it lower? Because, in fact, that's their mandate. Their mandate is to make money in good and bad markets, and it would be the better way for them to outperform.
Good question, but you know as well as I do, long-short hedge funds, their longs hurt them more than their shorts help them. So they're always leaning long, the majority of hedge funds. So even if the market goes down and they short the market, their longs will still hit them a lot harder than the shorts will help them.
So 2710 to the downside, otherwise we go higher. In that environment, what do you see leading the way?
So I think this market has shown us that you cannot rally substantively higher without large cap tech. So you have to see that Netflix indicator. You have to see the Amazons, the Netflix, the Googles. Facebook's a different entity unto itself, but you have to see the majority of those FANG group move higher in order for the overall market to move higher as well.